The price of gold continues to reach unprecedented levels. Below are various methods through which investors can gain exposure to gold. 1. Bars and coins. Retail investors have the option to purchase gold from dealers who sell bars and coins, either in physical stores or online. Both gold bars and coins serve as effective means of investing in tangible gold. Although this approach may incur a higher cost per ounce, it offers the significant advantage of possessing the actual metal, thereby eliminating counterparty risk. 2. Spot market. Typically, large buyers and institutional investors acquire gold from major banks. The prices in the spot market are influenced by real-time supply and demand conditions. 3. Exchange-traded products. Exchange-traded products, including exchange-traded funds, ETFs, issue securities that are backed by physical gold, enabling investors to gain exposure to gold prices without the necessity of taking physical delivery of the metal. ETFs have emerged as a prominent category of investment demand for this precious metal. 4. Future markets. Investors can also access gold through futures exchanges, where contracts are bought or sold for a specific commodity at a predetermined price for a future date. The Commodity Exchange Inc., COMEX, part of the New York Mercantile Exchange, stands as the largest gold futures market in terms of trading volume. Additionally, the Shanghai Futures Exchange, which is China's leading commodities exchange, offers gold,